Welcome to Drill Down Earnings, a quick look at the latest quarter from Amazon.com. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology. Amazon's one of them. Q2 earnings for this company, Q4, of course, is the big game for these guys. We're on the holidays and so much bigger in terms of everything for this business. But this is an important quarter because we've seen some changes in the business model starting to take place. So a little bit better than Wall Street expectations for these earnings as they came out this afternoon here. In particular, net sales, $167.7 billion in the second quarter. That's 13% higher than it was a year ago. So this business still at this scale, still growing in double digits. Pretty impressive across all boards. We're going to dig into some of the different parts of their business. They looked at a 10% operating profit margin. That's actually a little bit worse than what we saw a year ago at this time. And it's important because they didn't want to talk about tariffs on the conference call, but there was a lot of concern about what are tariffs doing for consumer demand, and it looks like not much. But it looks like although Amazon, we know, has been increasing their prices a little bit, it looks like they're also eating some of those higher costs here. But again, Andy Jassy, the CEO, saying on the conference call that it was all just noise. They just don't know how tariffs are going to shake out here because a lot of the tariffs have been sort of announced and then taken away. And so we'll see how it plays out over the course of the rest of the year here. Now, their Amazon store, their online business, 38% of revenues, but lots of other things. Their in-person stores, I'm calling it Whole Foods because most of the revenues there, was 3% of revenues. But their third-party business, 24%, also selling stuff online, but the third-party sellers doing quite well. And Amazon Web Services, of course, we're going to talk about that a lot. That was 18% of revenues in this quarter. Now, in the quarter that they just reported, their Prime Day, they said was the largest that they have ever had. Always focusing on what the consumers were saving. They said billions of dollars, but online store revenues climbed 11%, $61.5 billion. And an online business is cranking. Again, 16% growth on a year-over-year basis. The physical stores, the Whole Foods business, mainly up 9% on a year-over-year basis. Really impressive growth there from a grocery chain. And I do want to call it their advertising business. It's a small business for them, 9% of revenues, but boy, is it growing. 23% year-over-year growth. Those are ads, principally ads on the website of Amazon.com, and a very big and a fast-growing business, now at about $16 billion in revenues. Now, Amazon Web Services, the big focus here. So it grew at 17.5% to $30.9 billion, the operating income of $10 billion in that business, 10.2 if you're scoring at home or for those of you alone. But Amazon Web Services signing big deals with PepsiCo, SAP, GitLab, SK Telecom. And why are those businesses signing up? So they can get access to NVIDIA Grace Blackwell processors, which are powering a lot of these AWS centers, and as well as some of their AI agent, agentic AI frameworks that they call like Bedrock, Agent Core, and Strands, they say is really taking off there behind the scenes at AWS. So how did the stock react? Well, the market didn't love these numbers. Stock down 3% in after-hours trading because the capex spending is continuing, but the stock is up 25% for the last year. When you look at S&P 500, up just 15% in the last year. I want to talk about capex here. Of course, they're spending so much money to build out these data centers. Capex rose 87%, and free cash flow as a result falling. So their trailing 12-month capex has now crossed $100 billion, $103 billion to be exact, up from $55 billion a year earlier. And that's really about spending for AWS infrastructure and specifically spending for AI. Now, AWS is a small part of revenues for this company, and you can see it even in the quarter. For a business that's doing over $160 billion in a quarter, AWS revenues of just $20 billion. But it's half of the profits. It's just half of the profits, though. And I think that's the most interesting turn for this business. They ran the retail stores, online stores, at a loss or break even for decades. AWS started to make all of the money for the company. They reinvested that too, but now they've turned up the profit machine in the stores, both the physical stores with the Whole Foods, but also their online store. And as a result, AWS was just half of the profits in the quarter. Here's Amazon CEO Andy Jassy.
AI is the biggest technology transformation of our lifetime, which is saying a lot because even in some of our relatively short lifetimes, we've been through cloud, mobile, and the internet itself. But I think it's going to be the biggest transformation technically in our lifetime. And I think it's going to not only change every customer experience that we know and enable customer experiences we really only dreamed about before, but it's also going to change very substantially the way we work. And if you think about it, the way that we do coding, the way that we do analytics, the way that we do research, the way that we do finance, and measure finance. I mean, really, the way we do business process automation, the way we do customer service, every single area that I can think of in the way we work is likely going to be impacted in some meaningful way by AI. And I think when you have a big shift like that, you have two macro choices. You can either decide that you're going to embrace it, and you're going to help shape it, and you're going to figure out how to build the right tools to allow you to take advantage of the technology, or you can wish it away and have it shape you. And the posting that you're referencing, Ron, that I made was just really being clear with the team that we're going to pursue that former approach. We are going to embrace it. We're going to try and shape it. And so we have, we have a number of tools and agents that we've built already inside the company. And, these are things like, if you think about Kiro and the opportunity to have coding agents do a lot of the coding, that's very compelling. It's going to allow our teammates to be able to start from a more advanced starting spot and to be able to invent for customers much more quickly and much more expansively.
So what's it all mean? What's your big drill down earnings takeaway, and what's the one number that tells us a whole lot about this Amazon quarter? So Q2 earnings from Amazon.com, your essential summary tells you that the business did quite well, $167.7 billion in revenues in the quarter, a lot better than 148 from the year before, 13% better, as a matter of fact. And the bite, the one number that tells us a whole lot, really is that growth in AWS. AWS growing at 17% on a year-over-year basis, now over $30 billion in quarterly revenues. Just a fantastic business for Amazon, and the future of computing may be here right now. Thanks for checking out Drill Down Earnings. Subscribe to us. You can check us out on X at Cory TV. You can see me there, as well as at Drill Down Pod on X, on TikTok, on Instagram, and yes, on YouTube.